Right now, shares of BigBear.ai holdings, trading under the ticker BBAI, are priced at $7.82. The stock is getting hammered today, down a steep 8.16%, a drop of 70 cents from its previous close. This isn't a gentle slide. It's a significant intraday bleed that has pushed the stock to the lower end of its daily trading range. And while many might look at the name BigBear.ai and immediately associate it with the broad, exciting narrative of artificial intelligence growth, the reality of today's price action tells a much more complicated and urgent story. The expectation for any company with .ai in its name is one of relentless forward momentum, of capturing a piece of a burgeoning industry. But the screen in front of us paints a picture of pressure, of sellers firmly in control, forcing us to ask what the market is seeing that the popular narrative might be missing. The common belief surrounding BBAI is that it's a pure play on the AI boom, specifically positioned to benefit from large, stable government contracts within the defense and intelligence sectors. This is supposed to be its moat, its source of strength. Investors often buy into the idea that its deep ties with the U.S. government provide a level of revenue predictability that you don't find in more commercially focused AI firms. However, today's brutal decline challenges that perception directly. A nearly 9% drop on what appears to be substantial volume isn't just a reaction to a down day in the broader market. It suggests a fundamental reassessment of the stock's near-term value by significant players. The trading pattern itself is revealing. The stock gapped down slightly from its previous close of $8.52, opening at $8.60, hit a brief high of $8.68, and from there it has been an almost uninterrupted slide to its current level, hitting a low of $7.77 along the way. There were no meaningful bounces, no significant fights put up by the bulls. This indicates sustained selling pressure, not a sudden panic event. This is the kind of price action you see when an institution decides to lighten its load or when a negative piece of information begins to filter through the market's more informed channels. The disconnect between the long-term AI story and the short-term market reality is where opportunity and risk live. While the companies focus on providing decision dominance to defense, intelligence, and other government agencies sounds promising, its financial performance is yet to fully back up the hype. The fact that its P/E ratio is not applicable tells you the company isn't profitable on a trailing basis, a critical detail in a market that is becoming increasingly skeptical of growth-at-all-costs stories, especially when interest rates remain elevated. The market is demanding a clear path to profitability, and for a company like BBAI, that path is paved with government contracts. These contracts, while potentially massive, can be lumpy, subject to intense competition, and beholden to the whims of federal budgets and political cycles. A delay in a contract award or the loss of a key bid can have an outsized impact on quarterly results, and consequently on the stock price. Today's sell-off could very well be a reaction to perceived headwinds in that exact area. Perhaps whispers of a delayed contract, a competitor gaining ground, or simply a broader sector rotation out of non-profitable tech. Looking at the broader context, the stock is trading significantly below its 52-week high of $10.36, but it's also miles above its 52-week low of $1.51. This extreme range highlights the inherent volatility of the stock. It's a battleground stock, attracting both speculators betting on the AI theme and skeptics who are wary of its financial footing and government dependency. The current market capitalization of around 300.27 crore, which translates to roughly 300 million USD, places it firmly in the small cap category, making it more susceptible to sharp swings from relatively small shifts in investor sentiment or trading volume. The lack of a dividend is standard for a growth-oriented company like this, as any available capital is expected to be reinvested into the business to fuel expansion and development. This is a stock for those with a high tolerance for risk, not for those seeking stable income. Let me know in the comments below, what percentage of your portfolio is allocated to speculative growth stocks like BBAI? The business model itself is centered on creating what it calls operational AI. This isn't about consumer-facing chatbots or image generators. BigBear.ai builds complex predictive and prescriptive analytics platforms for high-stakes environments. Think about the U.S. Navy using their software to optimize supply chains for fleets at sea, or an intelligence agency using their tools to analyze vast datasets to identify potential threats. Their clients are not fickle consumers. They're large, bureaucratic organizations with long procurement cycles. This is both a blessing and a curse. It provides a degree of stickiness once a contract is won, but it also means revenue growth can be inconsistent and hard to predict from one quarter to the next. The company has highlighted its work in areas like cyber engineering, cloud-based solutions, and logistics. It acquired Cangium, a company focused on vision AI for security and operations, which was meant to expand its footprint in areas like airport security and trade. These are all promising fields, but integrating acquisitions and proving their value to the bottom line takes time, and the market, as we see today, is not always patient. So, what could happen in the next 10 days? The immediate future for BBAI's stock is balanced on a knife's edge, defined by the support level it just tested at its intraday low of $7.77. In a bearish scenario, if that level breaks with conviction, the next stop could be a test of the psychological support at $7.50. A failure there could open the door to a slide towards the lower sevens as stop-loss orders are triggered and momentum traders pile onto the short side. This could be accelerated by negative market-wide sentiment or by any specific bad news related to the company, such as an analyst downgrade or news of a lost contract. The selling pressure we're observing today could easily continue for several sessions if a large fund is indeed liquidating its position. In this scenario, the expectation of a quick rebound would be met with the harsh reality of a stock in a technical downtrend. Conversely, a bullish outlook for the next 10 days depends on the stock holding that $7.77 low. If it can consolidate around these levels and buyers begin to step in, it could form a base for a recovery. The catalyst for a sharp move back up would almost certainly have to be company-specific news. A major contract announcement from the Department of Defense, for instance, would completely change the short-term narrative and could send the stock surging back towards the previous close of $8.52 and beyond. The government's fiscal year often brings a flurry of contract awards, so the timing for such news is always a possibility. Another potential positive catalyst could be an unexpected pre-announcement of strong quarterly results or an upgrade from a respected Wall Street analyst who sees the current sell-off as an overreaction and a buying opportunity. In this case, the reality of a tangible business win would overwhelm the negative sentiment that is currently dominating trading. A third and perhaps most probable scenario for the next 10 days is continued volatility and consolidation. The stock might bounce between roughly $7.70 and $8.20 as the market digests today's move. Volume might decrease as the aggressive sellers finish their orders, and the stock could enter a period of equilibrium, waiting for the next major catalyst to dictate its direction. Traders will be watching the volume patterns very closely. If the stock can mount a recovery on increasing volume, it's a sign of strength. If it tries to bounce on low volume, it's often a sign of a weak-willed rally that is likely to fail. The broader market will also play a huge role. If the Nasdaq and S&P 500 find their footing and start to rally, it will provide a tailwind for beaten-down tech stocks like BBAI. If the markets continue to show weakness, it will be very difficult for BBAI to stage a meaningful comeback, regardless of its own fundamentals. In the end, the story of BigBear.ai is a classic conflict between a compelling, forward-looking narrative and the messy, often disappointing realities of financial performance and market mechanics. The expectation is that of a key player in the application of artificial intelligence for national security, a business with a strong, defensible position. The reality, at least today, is a volatile, non-profitable stock under significant selling pressure whose fortunes are tied to the opaque and unpredictable world of government procurement. Over the next 10 days, investors will be watching to see which of these forces wins out. Will the support at the day's low hold, paving the way for a recovery driven by a positive catalyst? Or will the selling pressure continue, validating the market's current fears and pushing the stock further down? The answer will likely depend not on the broad AI theme, but on the cold, hard specifics of contract wins and the path to profitability.